Okay, it's March 13, 10:35 a.m. We are looking at Ali Financial. It's a bank. Bank stocks are crashing again this morning from the crisis from SVB Bank. And you'll see here there's lots of media reports about this. So we want to figure out, is this going to keep crashing? And what are the people on Wall Street, the large hedge funds, doing? So we look at unusual options and getting an idea. So at 9:58, you could see here that 19,020 strike puts were sold. So that's bullish. They don't think it's going to fall below 20. It's at 22 right now. And there's at 9:53. Just recently, less than an hour ago, you have these April contracts buying the 20 puts, 4,000 of them, and selling 24 puts, 5,000 of them. So that's a ratio spread. But what does that mean? Well, we'll take a look at that. Is that bullish or bearish? Here is the trade, the volume here. You'll see at the 20 strikes here that they bought the 4,000 of them. And then at the 24, they had sold 5,000 of them. It is a little bit more in the volume now because people probably also added to this, or they just added additional contracts. But we want to look at that massive quantity that was just placed. And if we look at it, here it is. I have it here, 5,000 of them here, 4,000 of the puts here. You'll see here that it's actually a bullish trade. So they will break even. They don't think it's, by expiration on April 21, they don't think it's going to drop below $21.65. That's the break even on this, on the day of expiration. So it is definitely bullish because as it starts to go up, they will be profitable. As it starts going down, they will be immediately they'll start having some losses. However, during this phase here, the theta will help them compensate that loss as time goes on. So their real break even at expiration is right at about 21.6. So let's look at the chart again. 21.6 is actually just a little bit below this low point here that it had dropped this morning. It's also here a resistance you could see, or support here. Also, back in December 22, this was a very strong support here. So they believe that if it doesn't break that point, they're going to be profitable. They'll probably cut their losses if it does continue to go down below that 21.6. So their losses are very minimal, but they're taking advantage of this high volatility. You'll see here. Currently, the volatility is at 100%. That's very high. So they're selling. That's why they're selling 5,000 of these to take advantage of that volatility, to get that volatility credit. Using that credit to pay for the 20 puts to minimize their losses in case it does drop below 20. All right. So if you like this analysis, subscribe. It really helps this channel out so that I can continue making these videos and let you guys know whenever I see these unusual options activity. Keep in mind that you don't need to go very bullish on this trade, on these unusual options, because they're selling the volatility. And so as long as it's not going to go below the 21.6, they're going to be profitable. So that doesn't mean that it's going to bounce right away. All right. It just means they're selling the volatility and they're just taking advantage of that. It's going to trade above this level. It could just kind of trade around this range and they'll still be profitable. All right. So take care, everyone, and good luck.